Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss Walmart's earnings affecting retail and FOMC.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
We're up 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in Raw.
Featuring Dan, Deity of Dips,
And Hugh, honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Wednesday, July the 28th. The Fed came out. We're recording this on Wednesday, actually. Market hadn't even closed yet. After we record our first 2 segments, we're going to go back. We're going to review the Fed, and we'll have, a good review of it towards the end of the pod. But first, yesterday, we did have Walmart's earnings affecting the rest of the market. And before anyone that's watching this on YouTube says anything, yes, we are matching. We both just got these jerseys in, and I guess we were both excited. Oh, you're 15, dude? I'm 14.
Hell yeah. I'm 19 on the back, too. Oh, wait, no that was another
15.
Jersey.
I wonder if my other one has a different number.
Well, because it was when shitty intern Christian asked if I could be drafted, what number I would be. I said 15 or 19.
I'd probably be 14, dude. It, got the birthday number and then also Nick Marshall.
Yeah, hey, what are we, 6 weeks from the birthday? What's today's date?
We're getting there, dude.
Yeah, 6 or 8. Yeah,
if I can get another happy birthday from Gary V again, that's all I really want.
So,
but yeah, Walmart's earnings came out yesterday, and if you want me here, I'll just go ahead and read what they said real quick. Walmart's cut its quarterly and full year profit estimates because of rising food inflation. This alarmed investors who deliberated the implications for other retail stocks. The big box retailers said high prices are spurring consumers to pull back on general merchandise spending, particularly in apparel. It dropped 8% and dragged a lot of others with it, like Kohl's and Target down 7 and 5. Apparel companies hit bad, like Macy's down 6. So basically all retail down around 5 to 8%. Obviously Walmart, I guess, king of the castle for retail. But what do you think that implicates for the future? I know we talked about just a podcast or 2 ago how Netflix, we said they maybe just made it look like they do bad. And so they made it look like they'd be worse off. But then whenever it came out, it was like, oh, we're not as bad as we said we would be.
Yeah. So the interesting thing about this is, to me at least, is that we've been dealing with high inflation for, God, what is it, 16 months now? I was going to say the last year. However, it's turning into like 2 years, 3 years.
Yeah. You got to think the COVID, the pandemic started, what, 2.5 years ago almost now?
Yeah, exactly. So we've been dealing with this for quite some time. So for us to act like, consumers are now being hit by inflation, I feel is a little bit of a cover up and like the we're probably to go.
two years almost to this date from getting our second stimulus check. I feel like the first one probably happened in May. And then the second smaller one happened late July or something.
Yeah. So for us to be blaming it on consumers being hit by inflation and global supply chain issues feels like let me see. Feels a little bit like the scapegoat, and like there's something that maybe old Sam Walton isn't telling us. Because again, we've been dealing with this for so long, and to cut and listen, Walmart doesn't cut guidance. Like Walmart, I mean, listen, you talk to anybody, honestly, anywhere, and they probably go to a Walmart at least like once every other 3 months. Like at the bare most, like everybody goes to a Walmart at least once a year.
Before I moved to Houston, I swear I was probably there at least 4 times a week.
That's what I mean.
Think, like my dad probably still averages like 0.8 times a day. Like
that's what I mean. Like if I ask, it's literally like Amazon and Walmart. I ask you, how often do you go to Sam's Club or Wegmans or, I don't even know, like what's one of those, like BJ's is probably like, you'll probably tell me, once every 6 months. I ask you how often you go to Walmart, and most people, I would say it's probably once bi-weekly.
The supply chain thing they're referring to still, I mean, I know these were mainly like 6 months ago, but did you ever see the pictures where it was just like them having like lawn chairs take up like entire aisles just because they don't want to have like empty aisles because that scares consumers?
That's
and
what
they just
I mean.
use like really big ass items to take up huge rows to just make it look like, it looks like it's lawn chair season.
And that's what I mean by this feels like a cop out. This feels like we're really just throwing something out there that like the average person will just be like, yeah, okay, maybe. You know what I mean? Like that's kind of what this feels like. So I'd rather because and that's why I think the stock, got so scared, was because investors were like, hang on a minute. This isn't a new issue. Why is it just becoming an issue now?
Don't you think that if that was the case, all the other retailers that went down because of it would have said something like, hey, I know our apparel stocks or our apparel sales are still doing just good. Like Kohl's, they're like, fuck, why did we drop 6%? We didn't deserve that. Fuck you, Walmart.
I would. The only thing that I would say is that it's kind of like when someone calls out, let's just say that Biden calls out Jeff Bezos or something. Bezos is not going to formally respond. So same thing with this. I feel like it's almost, if they did bring attention to it, they would almost be signaling that there is this same potential issue. You know what I mean? Like that I don't know. Like again, is that might be wrong. And then just one thing to note. I saw Unusual Whales tweet this. The Walton family fortune fell $12.9 billion today. Talking about they reported earnings due to Walmart loss. Now again, that's literally peanuts for them. But that is just wild that you can just lose 12 billion and it really not mean anything. And the funny thing, and underneath that Unusual Whales post was someone said something along the lines of like, another man's shit is another man's gold. Walmart is like the perfect the perfect
one man's
example.
Trash is another man's treasure, I think is the
that's what it is. Yeah, that's what it is. I just think it's funny that Walmart's really been able to stay inside the game where it's like, do you have Kohl's down south?
We Kohl's, yeah.
Yeah. Like, or not Kohl's.
I was like, Kohl's Cash, dude. That's like the next best thing to actual money down here.
What am I trying to think of? I forget the story that I'm trying to think of, but it was like a Walmart competitive and they went out of business.
Kroger?
I remember like 5 or 6 years ago. Kmart, that's what it was. Yes. Did you have a Kmart down there?
Yeah, we had Kmart. It got replaced by a Winn-Dixie, then a Greer's.
Got it. Okay, yeah, like that was Kmart and Walmart felt like the same to me. And then like I said, is that Kmart just closed all its doors one day. It was just crazy. So that's on Walmart. The one thing that I said is that, and why we bring it up is because I'll be interested to see the next 6 to 12 months because, like I said, this feels like a cop out, and a lot of times these companies will just kind of give an answer to kind of hold everybody off until they can either fix the real issue, or it's, let's just say 6 to 12 months from now, they then blame it on a new issue, if that makes sense. And so I'll be interested to see exactly how this plays out. Maybe this is the issue. However, my gut says there's a bigger issue.
All right. Well, do you want to move on to the first part of the Fed that we know about? I know we haven't really we haven't really dove into the conference yet, but you did have a good bit of time to read over the initial part of it. I mean, right now, as we're looking at it, and we're around 1 hour before market close. SPY is above 400. So push beware. Around 401 right now. Like I said, an hour before market close, we'll see where it goes from here. But yeah.
Yeah, exactly. And so, as we're recording this, as Dan said, the market is booming. We're trying to break that 400 and I'll hold over there. I'll be excited to see where we close, which is why we wanted to wait and we want to circle back. The one thing that is interesting is that, the 75 basis points was considered bullish, or really because it wasn't a full percent, it was considered a really good thing. Now Powell said some other things which we'll get into, which we'll get into, inside the next segment. But the one thing that I'm interested in, what did you think it was going to be? 75 or 50? What did you think personally?
Well, judging by just the last ones, it always just seemed like it wouldn't be. They just always made it pop the first day and then down the next. But I was expecting 50 just because of what you've been saying. But I'd love for you to dive in and let me know about it, because this is clearly your fucking Super Bowl that you get to experience 3 times a year.
I do get interested around 1:58 or Eastern time, when we're closing in. Now, the one thing that is interesting, without going into it, is that the Fed unanimously voted for 75 basis points, and without reading the transcript yet, I'll say that from my perspective, that's really interesting, because what that tells us is that everybody wants to clearly raise rates. However, they don't. This is exactly because if typically, let's just say it was 12-3, that means that you have someone who either wants to, become even more aggressive with 1 basis point, or you have the opposite side, which, hey, let's relax a little bit. People are starting to feel this raising rates, and this is typically pretty aggressive because, again, remember, the Fed usually likes to only raise and decrease by 25 basis points. That's typically where they want to stay. So for it to be 12-0, for the Fed to raise is pretty interesting. And the Fed said openly that they anticipate ongoing increases in interest rates. Now, that didn't obviously, because as you said, that the market is at 400. That obviously didn't scare the market. However, something tells me that the reason that we really, what do? We went up 1% from 2:30 to 3 o'clock. Something tells me that they probably said that they believe that inflation is peaked, and that that they expect that the inflation will start to roll down a hill, and that they should be able to ease off. Although they'll have to continue to raise, maybe the aggressive level will be less aggressive. That's my hunch. Again, I haven't read the transcript yet, but that's my hunch as we sit here and market is booming since Powell started to talk. And the only issue
he does have that effect.
He does have that effect. And the only issue is that if that is correct, and they are raising rates currently, and they expect inflation to be significant, or inflation to peak, again, that's a big if. It's kind of like when you're trying to guess top on a stock, or you're trying to buy the bottom.
Guessing top on inflation.
Yeah, like to call top on something that's been inside a bull rally for 2 years is really fucking hard. So that being said, is that all this optimism, if it's met with the higher inflation next data reading, oh baby, that wouldn't be good. So those are like the initial thoughts that we wanted to give before FOMC, before we read the transcripts and stuff. And so just to reiterate, 75 basis points. They use a unanimous vote, which we'll go into later because, I am interested in that because that almost never happens, like never. But so it's clear that they still, obviously want to raise rates and need to raise rates. However, if they did kind of, I don't want to say promise that inflation is topped, but if they kind of gave that notion that inflation has peaked and next data, we do see a higher inflation, that's going to be scary.
All right. Well, do you want to wait for the rest 15 or do you want to try and crank something else?
No. Let's wait till end of day and then we'll come back. So let's just say we're taking a break or something.
All right. So we are going to wait till the end of the day so we can figure out what happens the rest of the day. And we'll come back, give you guys the rest of the Fed review. And hopefully we'll have you this out by, let's say 8 p.m. or so. So be right back, boys. All right, so Hugh, you've had time to read over it. It closed, it hit 403. It's down to around 401 at close. What are your overall thoughts on this whole FOMC, all about it?
Yeah, so FOMC is kind of what we said was not going to happen, but what we thought. The first thing I'll go over is just from the chart perspective, because I know there's a lot of technical guys here. Now, we are currently holding over the 10 and over the 20 moving averages. And as we know, previously we had talked about, that we really couldn't hold over the 10 and the 20, and the 10 and the 20 were pointed down. Now those are starting to curl up and point towards heaven. And so one of the things I always think of with moving averages is that where the moving averages are pointed are where the stock's going to go, either hell or heaven. Their overall trends are made by the 10, the 20, and the 50. And if they're pointed in that direction, that's probably where it's going to go, because that's the overall trend. And so as we discussed, we broke over the 10, we broke over the 20, we tested it, and now we're holding it. And I mean, this green candle for FOMC is, we hit the 10 moving average, didn't even come down to the 20. And after that, it was just a massive green candle after this pullback. So again, we broke through, we had about 3 big green candles from, 384 all the way up to 398, really like 400. And then we had a pullback down to 390. And then obviously today, being Wednesday, it just freaking, what a move up to 402, 402.50. So that's a really bullish candle on the daily. And again, we broke over the 10, the 20. We also broke over the 50. Now, we did not hold that yesterday being Tuesday. However, we're back over and we're holding that. Now, that's not pointed up like the 10 or the 20, but I obviously, if we go for that 410, 415, the 50-day moving average will be pointed up, and that'll be really interesting. And it's important to note that on the daily, the 200-day moving average is right around that 418 mark, which is coincidentally just above where that last big range was. So remember, we had that like 7 or 8 days where it was purely just going between that 407 to 417 range and really wasn't breaking out of there until after FOMC. So it's a coincidence that the 200-day is right at that level, because that's obviously the next moving average that we would go for. Now, you guys know that over the past few days and weeks, I've been talking a lot about the low volume. And with this low volume, today still was rather low volume. We didn't break 85 million, which, I would have liked to seen on this big green day move up like 150 million. However, that is one of the larger volume days that we have seen inside recent days. Now we did have a 90 million volume day on the, what day is this? On July 14th, when we tested that low of 370. So, and really we haven't been over 100 million since a month ago, since it was June 30th. And that was the day again, same thing. We tested near that 372 level. So I really want to see another 150 million volume day. And it doesn't necessarily need to be a big move in one direction. I just want to see that. I just want to see the volume profile get there. And so that's what I'll be looking for next, especially on this move. As I discussed, we held the 10-day, we held the 20-day. We've now broke over the 50-day again. And, obviously we're holding that. And so the next spot for me is going to be that 409 area. We closed the gap. And again, this is why this shit is so rigged. So the gap from, what is this? January, February, March, April, May, June, from June 9th is 401.28. And we closed today at 401.4, 20 cents off. That is not a coincidence. And again, is that we haven't been up here since that gap down. That's not a coincidence. And again, of course, at one point during intraday, we went to 402.70. So for us to close down here, it's not a coincidence. Now that we've closed that gap, what are we going to do? Okay, we obviously have two options. Okay, we either break through this gap and go for that next point of consolidation, which is that 409 area, or we break down from here. Now that we close the gap, we can now start to go for those gaps lower. And I don't know what's going to happen. My hunch wouldn't be, I wouldn't be surprised if we did go for that 409. That is something that I think that we probably end up doing, because here's the thing is that everybody was super bearish, and I still do believe that we probably see lower. However, that being said, market makers aren't going to allow everybody to be on one side. They're not going to make their money if everybody is super bearish, just like they're not going to make their money if everybody's super bullish. So they could grind this up, get everybody into a bull scenario, and then drop it. That's kind of what I'm thinking is going to happen. That 409, as I think we talked about 3 weeks ago, that I was waiting for 402, 409.7. I still have my SPY equity short position on, and I'll pull it up real quick. I'm basically down 1.7% now, and I have about 20% of the position that I want. I would love to see a gap up towards 409 to really add into it. And again, I have about a 20%. And what I would do is that inside the situation is that if we got near that 409, I would go very heavy with a stop loss around that 417, 418 mark. So that's one of those ways that I can, that I can still have skin inside the game, and still have tons of skin inside the game, but not necessarily, have like this wide, I had patience. So now my stop loss isn't at this 417 when I was adding it at around 389 or 390, excuse me, because my average is 390, 386. That's how I gave myself breathing room while still having exposure to the downside. But now, if we gap up there, I get to get 5 times larger of an account of a position size, and keep a stop loss pretty tight. But again, is that if we had tanked and gone for that 362, I still did have exposure down. So that's the way that I like to handle these things. Obviously, I still trade intraday, but that's kind of what I'm looking for. And then at the end of the podcast, I'll go over what I'm doing for Thursday, July 28th, and what my current plan is as we are, recording this and looking at it. Now, I think it's important that next we go into FOMC and the different transcripts that, and what was said basically. So the first one that I think is extremely important as from the transcript perspective is when Powell said, although prices for some commodities have turned down, earlier surge has boosted prices, citing inflation pressure. Now, this is important because, and this doesn't really have to do with FOMC as it does have to do with more of the market. Because one of the questions that I get a lot is, it doesn't make sense that Tesla's up here, or it doesn't make sense that this stock is down here. Listen, there's a great quote out there, and I'm totally going to mess it up, but it basically talks about how just because that the market always returns to equilibrium. However, you can go broke before that happens. And I think of that sometimes because I think of that sometimes when we're in situations like this, when, does it make sense that that Tesla's up here? No. Did Powell's comments today were they bullish, but also with a hint of worrisome and a hint of caution? Yes, 100%. And so that's kind of what I mean by this. And I'll go on with the next tweet, or the next, sorry, Evan, cut that out and go back. So that was the first one that I just wanted to bring up. And the next one that I wanted to bring up was, we are looking for compelling evidence inflation coming down over the next few months. Pace of the rates will increase. The pace of rate increases will depend on data. And then he goes on to say, another unusually large increase could be appropriate at next meeting. And again, that didn't do anything to the market. So this is what I want to say, is that, like, just because, it doesn't make sense that the market should go up on that, doesn't mean that you should go broke, just because Powell or the Fed says something. Like from a perspective, does that mean that is that like super bullish? No. Powell saying another unusually large increase could be appropriate at the next meeting. And when he says that, he's probably hinting towards 75 basis points. And even though at another point he said that he thinks that inflation peaked, but then also, as we just spoke about, Powell says we will continue the process of significantly reducing our balance sheet. That really comes down to supply and demand. So these are all the little things where it's like, he's bullish, but he's also hinting with a level of caution. And then he goes on to say, likely full effect of rate increases has not been felt yet. And so this is why when we talk about the labor market and we talk about the job market, it's a lagging indicator. So when Janet Yellen is saying, the job market is strong, currently tons of people are in work. And then Powell comes out and says, the full effect of rate increases has not been felt yet. So that's one of those times where, like, I kind of get a little worried, because again, the labor market is a lagging indicator. Unemployment, the effects of a rate hike in unemployment typically don't show for 6 to 8 months. And again, we've done unusually large rate increases inside the past few meetings. And when I say unusually large, like I said, is that we typically like to go for 25 basis points, whether it's decrease or an increase. And then Powell goes on to say would not hesitate on larger move if needed. So this is what I mean by he's definitely bullish. However, it's with a hint of caution. All of this is, if inflation comes down, if we need to, and that's kind of what I mean. But then, of course, he says, and this is where, again, the Fed kind of backpedals, and it's all about a tightrope game, because he says our thinking is that we want to get to moderately restrictive level by the end of this year. That's 3 to 3.5%. That would be a historic decrease in inflation in record time. So do I think that that's possible? God, no. And that's where it's one of those things where, like, I don't want to see the Fed, say something, overpromise, and then underdeliver, because that's kind of what we're setting up when we say things like that. I mean, we were at 9%. So to think that we're going to go down 70% inside the next 5 months, it would be incredible. Really 4. We're at the end of the month. And then he goes on to say that the last inflation report was worse than expected. So all of this is kind of like a game right now where it's saying, we expect inflation to be at 3.5%, 3.5%, but then also last inflation report was worse. So that's why I'm cautious. And then, another thing that Powell said was, we don't think we have to have a recession. Now, I understand, that a recession, is obviously, it's obviously not the most ideal thing. However, it's a healthy market cycle. And that's one of those things that I kind of disagree with. Because, and again, it comes back to this tiptoeing around the issues that I have an issue with, because Powell also said it's necessary to have growth slowdown. So I understand that it's necessary to have growth slowdown. However, we're teetering with a recession. And so you're saying that we still need to continue to slow down. That's one of those times where, I kind of scratch my head with, we're teetering with recession. However, you're saying that we need to slow down growth, but also you don't think that we can go into that we need to go into a recession. So these are just the different times where, like, I'm happy that the market was up 2.6%. I from a technical perspective, we're breaking out. However, again, we're really teetering and splitting hairs here when the Fed is speaking, and obviously Powell. And again, this is where, like, I'm happy that the market was up 2.6%. However, when he says no one can be sure on whether we can achieve a soft landing, that was the whole point of this, is that, we're going to have a soft landing. We're going to have a soft landing. And then now it's like we start to backpedal, that's one of the ways that, like, we really start to backpedal, and we start to, and this is where, like, the trustworthiness of the Fed kind of comes into question, because, we, from the beginning, if we were to have a soft landing, that would have been historic. And so for us to say that, and then now it's like we're backpedaling, it kind of feels like a game that, like, we can't really trust them with this. And so that's why, I'm like I said, is that I'm currently really happy with the market, where it's at. However, I probably will be looking for a large short position near that 409 level at the bare minimum for a pullback, because as we discussed so many times, less than 2 weeks ago, we were testing 371 and now we're at 402. So if not for anything, we have filled the gap now. Now I want to see us fill the gap to the upside, to that resistance, and then at least look for a pullback. And then, as promised, the last part of this episode will be my plan for tomorrow. My plan for tomorrow, going into Thursday, July 28th, will be one of two things. So the first case is that if we open up here right at 401, I want to see us push for that 402.80 where we rejected hard to yesterday or Wednesday, and if we fail that level, I'll look to short, and basically I'll enter the short here at this 401 break to the downside, and my target on that short will be basically 399.30. And so, like I said, is that I want to push off open towards that 402.88. And then I want us to break that support at 401. And then my target will be right around 399.20, right around there. Maybe, depending on price action, maybe even 399.83, something like that. And so those are like those quick little scalps that, are high risk to reward for myself that I like to get in and get out. Now that's the short scenario. The long scenario is if we gap down below, I'll say below this 399.50, really like, let's call it 398.55. If we come down, test 397.57, we bounce off of that support and break over 415, I will look to go long up to 402. And so those are the bull and the bear cases for me, and what I'll probably be looking to do. Now, of course, if something happens between now and then, I'll change my thinking around, but I'll also be tweeting that out with my levels tomorrow. And those are my thoughts on FOMC and what I'm doing tomorrow.
And one last thing, you did go to Grayson Allen's wedding this weekend. Do you want to give any details about that? I know you're with Mr. Manziel, so it must have been a fun time. So let's hear about that.
Bro, it was a great time. It was the first time I had ever been to San Jose. And I got to be honest, I was really impressed with it. And I would love to to visit again. It was beautiful. We ended up going to the hills for, we were only there a few days, but we ended up going to the hills twice. Really beautiful scenery, fantastic weather, obviously, being in California. You know, one of the things that was different than LA was that it was about 10 degrees colder at night than in LA, and I guess, you know, that's based on location, and that was fantastic. I mean, you know, me being hot, having the heart condition, you know, it being, let's just call it 60 degrees at night was perfect for myself. So it was beautiful. Chris and Alan's wedding was a great time. You know, one of my good buddies, him and I have really gotten close. You know, he's a fantastic trader, even better guy, and it was really cool that I could be there for a special day and see that. So yeah.
All right, guys. Well, I hope everyone enjoyed this episode. We'll see you all next time.
And again, shout out to my homie Grayson for getting married, and I had an awesome time. It was a beautiful place, beautiful venue. Morgan and Grayson looked fantastic. See you guys Sunday.
Peace.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.